I'm Ryan Lightfoot-Brown of Fund Calibre. We're joined today by Tom Slater, the elite rated manager of the Scottish Mortgage Investment Trust. Thank you for joining us, Tom.
Thank you for having me.
And your portfolio is one of the most genuinely interesting trusts that we see. You've got an amazing array of stocks that of names we'll note, such as Ferrari, Spotify, HelloFresh, even Airbnb. But it seems like quite an eclectic mix. What is it that all those companies have got in common?
Well, if you look at the portfolio, I think there should be a real mixture of companies that are household names, some of the ones you referenced, stocks that you'll know, and then possibly some that you haven't heard of. The common characteristic is that we think they've all got the opportunity to grow to be substantially bigger than they are today over the next few years. Now, some of those companies might capitalize on the opportunity very rapidly. If you take a stock like an Alibaba or Alphabet, where they're able to grow with very modest capital requirements extremely quickly from already large size. Some of these companies will grow over a longer period, but we think the duration of that growth is extremely valuable. I think Ferrari is probably the most valuable brand in the world, and that will be exploited over decades, not the next quarter or two. So the common characteristic is big growth opportunities.
Okay, and away from some of those more millennial attractive stocks, there is Ferrari, as we mentioned, and Amazon in there, more traditional stocks. What is it about those companies that you see as keeping them sort of industry leaders, the best available?
Well, I think what a fundamental tenet of the way we think about investment is that we're in a period of really quite radical change, driven by technology, by Moore's law, by increasingly powerful software, by ubiquitous mobile communication. And so we think it's very unhelpful to think that there'll be some kind of long-term mean reversion, either in valuations or in industry structures. We think it's a period of rapid change. And the exciting thing is that some of the winners amidst this change are able to develop really quite remarkable businesses. They're young enough to be run by their founders. They often have winner-take-all economics or network effects. They get more valuable as they grow. They can grow faster as they grow. And so, if you look at the examples you mentioned, Amazon, I think, we are 20 years into the revolution in retail. And yet, I still think it's really early. There are huge categories of retail that have been quite slow to move online. Something like apparel or hard furnishings or grocery as examples of that. And equally, there are parts of the world where this hasn't changed dramatically yet. Somewhere like India, there simply wasn't sufficient penetration of desktop computers in India for this to really change things. But with the advent of the smartphone, you can suddenly see services that can go to 1 billion people in that country, and it becomes really interesting. So I think at the same time, value of brands has increased very substantially, because what you've seen is a huge growth in wealth levels across different parts of the world. It's clear that Western brands with really strong heritage, real authenticity, are deeply desirable, particularly in Asia. We've seen relatively few new brands coming through, particularly at the luxury end of the spectrum. And so where you have that, either in companies like Ferrari or Kering, the owners of Gucci and Bottega Veneta, we think the growth opportunity there has just become that much larger.
And of your stocks, Tesla and Netflix have had quite a difficult time of it of late. Why do you still continue to hold them?
Well, I think the first point is time horizon. So for us, we think about what will happen at a company over the next 5 or 10 years. We don't speculate on what share prices are going to do in the short term. We think we've got no edge in trying to do that. Our edge, if we have one, is about patience and the ability to look at the long term in this most impatient of industries. So if you take the two in turn, Tesla's mission is to move the world to a sustainable energy future. And they've had really quite dramatic success in bringing electric vehicles to the market. Go back 10 years, this was seen as a really distant, remote hope. Today, they dominate the luxury categories of the automobile market. The challenge for them at the moment is to get into the mass market. and scaling a business to deliver vehicles globally in the mass market is a really challenging thing to do. And operationally, they've stumbled at times as they've sought to go after that goal. And so the question is, do you think that long-term vision, that long-term objective has been compromised by some of the operational challenges, or are they still on track for that? And what I would observe is that nobody else has brought a rival product at scale to the market, and indeed plans to do that are still some way off. So I think that window that Tesla have, that edge over the established competition, remains really attractive. Now going to Netflix, I've for 20 years of my career, I've listened to debates about how the structure of the media industry will evolve, and is it about content, is it about distribution? And I think what Netflix have done is to build a remarkable footprint in terms of distribution to consumers at a scale, a global scale in 10 years' time that I think will be unprecedented. And at the same time, they've managed to use that scale to move into the content production area, and to do that at a scale and with a different sort of product, i.e., you can get storytellers to tell their stories in any format that they wish to do. And we see viewing habits are just changing really quickly. The cable industry has imposed a structure on television viewing over the past several decades that is now really starting to break down, and we see that with Disney or HBO trying to launch direct-to-consumer channels because our behavior is changing. I see that with my kids. They're completely nonplussed when they have to sit through adverts when in the program that they're watching. They have a completely different set of expectations. And so we think Netflix will just be a much, much bigger business with several 100 million subscribers if you look out over 5 or 10 years, with enormous pricing power because it remains incredibly cheap as a product to consumers. And as its content spend grows, it starts to squeeze out the traditional builders of content, and it was able to take more and more of the value in that product. So where we find companies that that we think have really attractive long-run prospects, we're quite happy to be out of favor with the market and go through periods where their share prices are weak over several quarters.
Well, Tom, that's been really interesting. Thank you very much for joining us.
Oh, thank you very much.
And for more information on the elite-rated Scottish Mortgage Investment Trust, please visit fundcalibre.com.